Well, hello and welcome to today's Trade Tracker. This is the weekend free update edition. Every weekend, as you know, we're going to be starting these free big picture, weekend updates explaining kind of where the market's heading based on our technical analysis, as well as a review of our automated trading strategies for the week. We have our Apex multiple time frame, two different strategies we're going to be reviewing as far as how those trades worked out, in addition to the overall big picture. So feel free to subscribe to my YouTube channel if you like what I'm showing here. These weekend video updates are going to be, a little bit longer, maybe 20 minutes or so. And then during the week, which are, of course, for our paid subscription members, those will be shorter, maybe closer to 10 minutes or so. And those will show more of our live system trade updates and what's happening there. So anyway, let's dig right into it. It's really interesting. Today, just so you know, is December 7th, 2025. It's 9:42 a.m. Sunday morning. And I just want to start off here with a real big picture of the NASDAQ index and kind of what I see happening here. It's really, really interesting. As you can tell, there's some channels developing here. This index here goes back. Let's see, this is here showing going back to about 2019 here, 2018. I'm actually going to scroll back a little bit further just so you see what happened here. Okay, as you can see, going back here, this is 2013, 2014, 2015. The Nasdaq was pretty flat, right? There wasn't really much happening at all, okay? And it wasn't until right here when we started getting any type of an uptrend. I mean, a significant uptrend in the Nasdaq. And that started January of 2019, right? So we figured we had all of 2019, 20, 21, 2, 3, 4, 25. 7 years of an uptrend in the Nasdaq. But what's been interesting, there's been channels within the Nasdaq that the market was trading between like two channels or range, and then it will drop down to a lower channel and then trade there for a while and so on. So as you can see here, in December of, like December 23 and of like January, um, you know, December 2018 into January 2019, right here, right? The Nasdaq was trading up and it was respecting this top channel line, right? Then it was trading within that channel for a while, okay? Then once it dropped down to the next channel, you see that it never traded in this channel again. It dropped down and then it started trading within the second channel, okay? And as I progress along here, you'll see that once it stopped trading in that channel, it dropped down and then went down to this third channel, okay? Traded in there a little bit, and once it dropped down, now it's trading in this fourth channel. And as we continue, right, fifth channel, sixth channel right here, trading there for a little bit, up and down. And then once it got through at the sixth channel, never to be traded that channel again. Now it's dropped down to the seventh channel. The seventh channel has been the longest channel. As you can see, it's staying within that channel here for a period of time. It started in this channel in September of 22, and it's been in there for 23, 24, 25, 3 years. So this is a 3-year channel. It stayed within channel 7. Of course, this was the tariff when Trump announced those tariffs. Market dropped, created the bottom of the 8th channel right here, but came right up. As you can see, we're still in that 7th channel right here. Okay, so chances are, based on this technical analysis here, we can see even though it feels like the Nasdaq is going up, which it absolutely has been, what's interesting is within there, a subset, it has been dropping within these channels, right? Channel 1, that dropped down to channel 2, channel 3, 4, 5, 6, and here we are in channel 7. So whenever we break out of this channel, then most likely we'll be going to be trading within channel 8. The bottom of the 8th channel is 21,000 and the top is around 25.5 or so. So call it, for sake of round numbers, yeah, 21, to like 25.5, right around there. So chances are once, I mean, we're approaching an all-time high here, but if and when we ever get down to this second channel, we'll most likely be going to be trading within this channel for a while. So it's not out of reason to expect, going into 2026, sometime that year, I would not be surprised at all if we break down to this lower channel and we get down to the lows of, 21,000 or so, right around there in the NASDAQ. So that's certainly in the cards. But right now, let's focus on where we're at right now. This is the all-time high that was put in the end of October of 2025. Right now, of course, this is December 7th, 2025. The all-time high in the NASDAQ, 26,399. This is using the NASDAQ futures, the NQ chart here. And you can see we're approaching the previous all-time high. So it's going to be interesting to see what happens here. Can we go above that? Well, of course we can go above that. I mean, the top channel of this channel is all the way up here at 27.5. So, I mean, there's nothing to say we couldn't do that. Okay. However, there are some other things I see within here that are interesting to note. You can make your own assumptions, and we'll show you what else is happening here. Okay, this is a more kind of of course, a micro chart here. And we can see that there was a significant trend change here. Okay, this, I'll give you a sake of what we're looking at here. This is the end of July. July 31st was that peak right there. Okay, we hit that high October 29th, 2025, which is right here, the 26,399. And ever since October 29th, we have been trending down. But right here, as you can see, there's obviously an aberration here. There was some news that came out over the last week or two, which drove this higher. So what's going to be interesting to see is this a true breakout? Is this going to make new highs and continue up? Or is this just a news kind of a short-term pop because of some recent news events? Is it going to hit some of the resistance numbers here? Maybe make a double top and then turn down. So for those of you that are technical analysts, you know that typically whenever there's a top on the market always wants to go back and test the previous high, which it looks like it's doing right here, right? Of course, the previous high, 26,399, and we're at 25,735. So we still have, quite a few points to go. Another, 600 or so points, 700 points before even hitting the all-time high. But what's interesting is we're hitting some serious resistance, right? There's a lot of trading going on here right near the top. I mean, it sprinted up, and then there was a lot of tug of war going on here between the buyers and the sellers. And then we hit, when the market dropped here, it came up and rallied a couple different times, right? Once, twice, and now it's three times at this number here. The 25,910. So we could certainly see some difficulty here with the market trying to get above 25,910. And if it does get above there, it's going to really be difficult to get above the 26,399, in my opinion. Why? A couple reasons. Number one, there's quite a bit of resistance up here right at the very top. And number two, keep in mind where this rally started. Okay, this low here was 23,935. Okay, right here, this is 25,910. It's a difference of about 2,000 points, okay? That the average daily range for the NASDAQ in a given day is 494 points. So call it roughly 500 points average in a day. So obviously that's 4 days, 2,000 divided by 500 is 4. So it's 4 days the NASDAQ basically went straight up. And for it to continue up for a fifth and or a sixth day straight up without any kind of a pullback is extremely rare. Could it happen? Well, of course it could happen. Anything in the market can happen. And I'm not here to call a top. What I'm saying is it's a setup for a top. It doesn't have to happen. But if this was to be the all-time high right here, it's certainly a perfect setup for it because we have a trend up. We hit an all-time high. We have a trend down. We have a sprint up here to test the all-time high to make a test or a double top, and then turn around and go much lower. And then as this line here, progresses down, we could see a big curve here, and then we could see a big drop down back into this lower channel here. I'm not predicting that. I've been doing this for over 20 years, and I'm way smarter to know I'm not going to predict the market. But what I can do is put myself on the right side of the trade. I know based on my technical experience, the risk now is definitely to the upside. The probabilities are way more to the downside, mainly because of the way we're stretched here. But what we do, as you know, we always trade. I mean, this is the long-term big picture, right? But when it comes to actually trading and putting money on the table, that's why we have our Apex multiple time frame breakout strategy, and we have that on a couple different time periods. We have a longer term time period. We use a tick chart, and then we have, of course, our 1 minute chart, and that's what we'll be covering more in the weekly updates. But anyway, I thought you'd find this interesting, so you can take a look at that. And one more thing here, I also want to show you is this is interesting also. Okay, while we had this up move, this is the 200 period moving average here on our 42 momentum bar, which are one of our key entry charts for our breakout strategy. But anyways, you can see whenever the market gets about 500 points above the 200 period moving average, which is the average of the last 200 periods of this 42 momentum bar. Basically, I marked that little blue little horizontal line there. That shows the top of where 500 points is from this 200 period moving average. As you can see, as the market was moving up, whenever it got close to that 500 points, it wanted to drop down, right? It came up here, didn't want to exceed it, came down a little bit, right? Did not want to exceed it there, did not want to exceed it here, dropped a little bit. So it kind of pulls back, as you can see, when it gets at or near that 500 points above your 200 period moving average, all right? But here's what's interesting now in the last couple of weeks. As you can see right there, still shows there's 500 points up there, those blue lines, okay? As you can see here how the market was right near the very top of that 500 point range, right? Here it's about halfway up that 500 point range, and here it's in the lower, say call it the lower third of that 500 point range. So you can see it's losing momentum, it's losing some strength. Could it go higher? Like I said, everything can happen. Of course it could. I'm just showing you indications, kind of footprints in the sand. My analogy I like to use is if you're on a beach and you look at footprints, right? You can usually tell by those footprints if they were walking, right, or were they running. And if they're running, and they move to the left, they started running to the right real quick, well, chances are there's going to be a few more footprints going to the right before it changes to the left. It's just momentum is what I'm trying to say. So the momentum here is high, medium. Now, are we going to see a drop here? Well, we'll wait and see. But that's the way it'd be probably a higher reward to position yourself now more towards the downside than towards the upside. And if we break through the all-time high of that 399, then of course it changes everything, and we change our strategy and have to go with the longs again. But up until if and when it breaks through that 399, until then we have to be biased more towards the short side because that could potentially be an all-time high. But we'll wait and see. All right, so that was kind of interesting there. And then also here I want to show you some other things. Of course, I'm sure many of you are familiar with the Buffett index. It's quite simply an index that Warren Buffett uses. He's been using it for, I don't know, 50 years or however long he's been investing, and he loves this indicator. It's a simple math equation. It's the total U.S. stock market value, which he uses the Russell 5000, right? It's like 5,000 stocks. He divides that, the total value of all those 5,000 stocks, he divides it by the GDP, right? The gross domestic product. And then he gets a number, okay? And right now, if you take that as of, it's every quarter this number comes out, well, the U.S. stock market value, around 70 trillion. And then the GDP, the gross domestic product, is only 30 trillion. He takes that, it's a percent of 230%. Well, what Buffett has noticed over the years, whenever we get near this, the second deviation of that, the market drops pretty significantly, right? This is going back here, 1950. It's when this index started. As you can see, two standard deviations above or basically, um, you know, 200%, which would be 202 standard deviations. You can see when it gets near there, and this is the Russell index here, the stock market, it drops, right? We get near it, drops. Get near it up here again, right? It drops. And here we had a nice run. Two standard deviations was up here, right? Market dropped significantly, and that was back in the year 2000. We all know what happened there, right? The crash there in the year 2000, okay? Then over here, right, hit the two standard deviations again, came down, crashed, not crashed, came down pretty significantly. Some would call that a crash. Then we came up here, right, hit it again. That's the tariff right there, a little bit of a drop there. And now we're way up here, 230%. So as you can see, going back to 1950, there hasn't been any type of movement above two standard deviations except for a little blip right here. Then the market came roaring down after that. So we're right here, okay? I'm not going to predict when it's going to turn because nobody knows. But all we do know, what we do know is that there's certainly a risk if you're going to be long here. Okay, this is not where the professionals come in and start buying. Okay, this is where the professionals come in and they start selling. They start getting rid of their positions. They don't sell everything, but they're going to lighten up, right? They're going to take some profit here and they're going to start selling. And then because of fear and greed, right, a lot of the retail traders, they get greedy because the market's hitting these crazy highs and they just get in with both hands and they can't buy enough while the professionals are selling. And then when this happens, whenever that comes back down, then the retail trader wonders what happened, right? Everything moves against them. They feel like they can never win. And then the pros just clean up big time. But what also is interesting is usually when we get to the second standard deviation, usually there's a lot of greed in the market. But what's different about right now is if you go to the MSN fear and greed indicator, um, there's fear in the market, which is very interesting because all the other times I've been watching this, whenever we hit that two standard deviation and got close to it, it was way over here. It was pegged at extreme greed or greed. So to know that there's actually fear built into the market now while we're at these nearing all-time high, that's very, very interesting. That's like I said, it's just the setup is here for a top. I'm not saying it's gonna be, but the setup is absolutely here, and we'll see what happens. It's just really interesting how we're right near an all-time high, and there's a lot of fear in the market. If you want to look this up, you just go to MSN.com. Just type in fear and greed index in your Google search or AI search, and you can read all about it. It's a seven different not proprietary, seven different technical analysis things they look at here, different variables. So anyway, just analysis here. Like I said, I don't predict the market. When you log in here, I'm going to show you what I see from a technical point of view. You make your own choice with your money to do what you want. I'm just telling you, I truly believe that the risk, though, is definitely going long here, and the higher probabilities absolutely going short. But log in during the week, and we'll show you the way that our trading strategy works. I'm just going to give you a quick little peek here, then I'll wrap up and show you kind of what it looks like. And this is an older chart. This is going back to September. But I just want to show you a big picture, what it looks like. And then if you choose to subscribe to the Apex Traders Club, we're going to go through these in detail and also do some live trading during the week and to show you how this plays out real time on the 1 minute chart as well as the 42 momentum, which is a little bit bigger picture. So anyhow, but this free, these weekend updates are always going to be free, and you can kind of see from a weekly synopsis of what happens. So when I start moving, even on the weekend update, when I move forward, I'm going to show you kind of what happened in the past week with the system. But here's kind of how it works. Basically, it's there's a couple of variations to it, but the system automatically generates, in this case, it can go long or it can go short, right, depending what the market's doing. But in this case, we had a buy signal. This is all automated. You can get this, I can get this emailed to you, and you can get this set up on your own PC if you like. It works very well. But basically, I'll show you what it looks like here. This is an automated buy signal here. The system tells us to buy here. And then what happens is automatically we enter 4 positions. We have a stop loss that goes in automatically 100 points below the entry. So the entry here was 24,159.25. Our stop loss of all four contracts is 24,059.25. So it's exactly 100 points below. All right. And then we have standard profit targets. Automatically, we have, depending on the volatility of what the index is doing, these targets could change sometimes, depending if we're in a tight range market or if we're in a very wild, crazy, high volatility market. But at this point in time, these were the two targets. Target one was 120 points, and these go in automatically. These are set upon the buy. So when the buy is hit, our stop goes in minus 100 points, and our our four targets go in automatically. First target and the first position. I'm sorry, I think I said three contracts. Four, in this case, four contracts went in long. Okay, and all four get stopped out here. Target one is 120 points. Target two, 160. Target three, 270, and target four is 423. These are set based on an algorithm that I've built for volatility. Anyway, in this case, target one came up, gets hit, right? Take profit. So now we have three open trades. Okay, the market came down, all right, hit our stop loss. So right there, we had one position that was profitable, and then three hit the stop loss. Now, the way the system is set up is if and when price comes back and re-hits our same entry point like we have over here, 159.25, right? So what happens over here, we re-enter at 159.25. Okay, the remaining three contracts. Why not four? Well, because we already took profit on one. The three that got stopped out get reopened here, right near this 159 point here. All right. And then what happens is now we have three contracts. Our stop loss once again is the same place, and there's also a trailing stop here once we move up. So basically, we have our three contracts here. All right. We don't take any profit here because we already did back target one, but target two now we take a profit 160. So now the second contract has a profit. The third contract 270, another profit, and the fourth one closed out at a profit here of 423. What happens is once target two gets hit right here, then we have a stop loss on these two positions here. It's a trailing stop. It's an algorithm built in that we trail it here. So if this market was to turn back, let's say these bars here came down here, we would have been stopped out here of the remaining positions at 24,319 and took that profit there. If it goes up, right, take one out here, then there's one left. If the market here was to come back and fall back, well, then we get stopped out here. If it goes up, then we take a profit there. So the value of this system is we're taking profits while we're making money. And then at this point in time, it doesn't matter what the market does, right? Because we elect in a profit. Either we make a profit up here, make a profit down there. And that's a great place to be is once you're trading in a position where, it doesn't matter what the market does because you're going to make money either way. Obviously, you got your stop losses here early on. The system is based on a 1.5 to 1 risk reward ratio, meaning for every dollar that we're risking, the system is designed to make $1.50. Now, of course, that doesn't happen every trade, every position, or every week, but over a period of time, that's how it's been proven to work. It's about a 60%, or to be exact, a 58% win to loss ratio. We'll call it roughly 60% win to loss ratio with a 1 to 1.5 risk reward. That's a 60% win to loss trade. So we win 60%, we lose 40%. And then for every dollar we risk of a dollar, we make $1.50. So we're winning 60%. And when we win, we're making $1.50, and we lose, we're losing $1. So if you just simply do that math, you'll know it's obviously a profitable equity curve. So we'll talk more about this on the Apex Traders Club if you choose to join. We get into this. We do some live trading during the week. But if you just want to kind of watch and join us here and subscribe to my channel every weekend, I'll do an update. It's for free. In the weekend, you can kind of see what's been going on. So leave it at that. Like I said, I just want to remind you, please, to subscribe. I like to keep you in the loop of what's happening here. A lot of exciting developments coming out. I got a book I'm going to be releasing here in about a month or so, writing a book on funded trading. It's going to really help, I think, a lot of you kind of understand how to how to make money with this. A lot of people think the goal is to get a funded account when it's not the goal. The goal is to make money with the funded account and continually pull money out of these accounts. And that's what I'm going to show you what you can do next year. So but when this book is released. Okay, so let's leave it at that. Hope all is well, and we'll talk to you next weekend. Thanks again. All right, bye-bye.